Hi, fellow traders. Yes, it is earnings season. We have been waiting and waiting and waiting. Seemed like an eternity that it took for this last month to pass, but it's here. We got a little taste of it today. The official, unofficial, or unofficial, official start day of earnings is actually tomorrow. But today we had some financial stocks, some banks that reported earnings, and everybody looked like they did pretty good. So we're not off to a bad start. This is kind of a litmus test for us to see what the banks were putting out and how they were going to trade. This was going to give us an idea of the overall mindset of the market participants. So we'll take a look at those. I got a couple examples. Now, I don't trade those. I don't trade financial stocks. And it's just a personal decision. It's not that they're bad. They are a little tough to trade sometimes. They have higher floats. And sometimes they just don't move. But today we had several of them move and actually give some good trading opportunities. But they played a little, it's usual game early, but we're learning that oftentimes we either have to wait it out or, we put our toe in the water, and if it's too cold, we just wait and it'll come back to us. So we'll take a look at those here in a minute, but it's time to wrestle that bull. It's time to wrestle it. And leading into this last quarter, I'm more than ready. I just hope I don't get too excited and too ready and just go too far on some things, but I'm ready. So let's take a look at a couple of these financials. The banks that reported today, and you could see it was kind of a choppy mess here. We kind of ran up a little bit, then we got down, and then look at the opening candle. This is the type price action that you have to wait for it to just settle, because this thing is, I hate to use the word bipolar, but that's just the way it's acting. And you can see we had the huge opening candle, and this pretty much traded. This was like 1.5 points, and it almost traded its the ATR. The ATR is like $1. What was it? $1.60 some cents at the open this morning. So it almost traded the whole ATR in this first opening candle. And this gives you some pause. But you look at the next candle, it traded inside of this. And for me, during the first 30 minutes of the trading day, I do not trade inside that 5-minute opening range. Now, I'll trade inside of it looking for some trend continuation after 10 o'clock, but not during the first 30 minutes. And you can see we tapped the opening range high. And what I like about this is we were sitting right on red to green. We were sitting above all of this, all of the moving averages, everything. And this would have been perfect. So we get in on the break of the opening range high, and this was like right at 10 o'clock, or right around the time where these trades typically turn into trend trades or trend continuation. The opening range breakout is not designed to be a long, drawn-out trade. It's designed to give us an opportunity to trade that volatility, but with better risk management during the first 30 minutes. And you're not going to get these huge moves. Every now and then we do get one that just goes and it doesn't turn back, but most of them don't do that. Most of them will give you a decent move, and then it'll come back, and it's either going to set up for a reversal where it goes the other way and it starts setting the trend the other way, or it's going to bounce or reverse and continue in the direction that it was going. So if you look at C here, we got the break. And the first thing I'm looking for on these 5-minute opening range break, the first target, if we are still below the opening range, the pre-market high, which is right up here, if we are below it, this is typically going to be my first target, because too often these stocks run up and reject the pre-market high and pull back in. So that's always going to be my first target. And I'm going to look to make sure that there's enough room between here and the first target. And we about have a point here. So ideally, we get in, we got a point to the first target, and then the next targets obviously is going to be dealing with daily levels, or if we're on a 52-week high breakout, it would be holding $half marks. But like I said, it's an opening range break. It within 30 minutes, it gave us a really nice move, and then that's it. No trend continuation. You know, we had a bounce here, but this would have failed. This would have failed the trend continuation. You can see we made higher lows, but we kept making lower highs. And so this was just coming together, and then finally, you know, we lost the bottom. You could draw a triangle here, and we kind of lost the bottom of that triangle, and then that was that. So note, this is an example of a trade giving you a good opening range breakout, but no trend continuation. And for those of you that's in the community, that's the next day trading class. You know, I shared the opening range classes online, so you guys have an idea of what the opening range strategy looks like. But you know, it wouldn't be fair to the members if I share all of the classes, because this is what they, you know, is a perk of being part of the community. But the trend continuation trade, that's what we're going to be looking at next. And guys, both of these strategies are so simple. The hard part is executing, and executing on a consistent basis. That's the hard part here. All right, so JP Morgan. This one, let's see, it gapped up, and here's the opening range right here, the low. Here's the high, and this one did just what a lot of stocks do. It set up, it triggered an entry, next candle sold off hard, pulled all the way back. This would have stopped me out, max loss stop. This a huge candle engulfed and just pulled all the way back. So this would have stopped me out. But here's the thing, and this is why I say you've got to stay engaged. These market makers, I'm seeing this happen too often on opening range trades. I'm seeing it trigger the break, it's baiting us in, and then the bottom's falling out. Or if we go short, it baits us in, and then it pops and runs all the way back up. And all it's doing is shaking everybody out. They're making money off of us, and then it tends to go back the way it normally goes. So what I've been doing is trying to pinpoint the stocks that this typically happens to, and what catalyst this usually follows. So I'm kind of tracking that now for the next several weeks. I'm going to be looking at it, because what this does is, if you get in and then you get stopped out, some people get frustrated and they try to make their losses back, and they may size up, they may anticipate, and end up losing even more. And we don't want to get into that. But this is a prime example. And then here is the pre-market high up here. So even if we got in here, we would be anticipating the break of the pre-market high. And there's nothing wrong with that. You just have to be ready to incur the risk if it comes back. I tend to like to wait until we've broken over it and then take it. And here's another one, JP Morgan. I think this one was a 3 billion share float and had a decent move. C had a 2 billion share float and it had a nice move. So these are doing pretty good. Wells Fargo, WFC. Look at what this one did. Here is the opening range. Opening range right here. We didn't quite trigger. This triggered, but it was just a quick dip. So you wouldn't have entered on this. One thing I have started doing is pausing like 10-15 seconds before I take it on the break, because I see this happen a lot. We came up, we started to pull back, we made a higher low, and then this thing starts to rip. There's no trade in here. Some people will buy into all of this, but there's no way I can logically buy into the 50, the 100, red to green, the 200, and then the 5-minute opening range. I'm not going to buy into that. So I'm just going to wait till it breaks it. And there's a trade. Here's a pre-market high. You can take profit here. As you see, it did react here. This is a supply zone. We pushed up a little bit. We had to pull back. It held a 20. Let's say we lost a 9 here, so we had to stop out. If we were in, that would have taken the rest of our position off. Here's the bounce. Time for some trend continuation. We could have easily taken easily taken this right here for the trend continuation. We could have easily taken this right over this level here, got back in on the break, or we could have anticipated the break, either one. We had our risk defined off to 20 and another good move up. So these stocks did give good opportunities. The last one we'll look at, and this is one a lot of members took because it was a lower price one. And not all the time is the lower price one the smart one to trade. You've got to look at the levels. You got to look at the float. If you have a high float, this thing is not going to work. It's going to be very difficult to move. I know this one only had a 1 billion share float, which is really not that high. But the volume wasn't there. We didn't have the volume. And that made it really tough. And it just didn't have any range. You can see between the low, the 5-minute open range low and the high was only about 75 cents. So it wasn't that big of a move here. And, overall, it probably moved its ATR today. And that was it. So this one didn't really have. This is one of these that messes people up. It messed a lot of people up. And then nobody really waited and caught the secondary move. But when you get a stock, when you pick a stock to trade and you find the one that you feel setting up the best, or it's set up the cleanest, and you trade it, it may not work right the first time. You can't give up and then go start chasing. Stay locked in. And if it doesn't work and it never sets back up, so be it. You didn't lose any money chasing. All right, so let's get into what I traded today. Now, Roku wasn't on earnings. I didn't really have any earnings stocks to look at because I wasn't going to trade the financials. I might have been stuck watching it, and I might have traded C, if I didn't have anything else. But we had some news come out on Roku at 9 o'clock. You see the jump here. And going into the open, we just kept pushing up. I wanted to pull back before I got in. And you guys, if you were in chat, you were paying attention, you heard me trying to talk myself out of taking this trade. But I said, look, the strategy is when it breaks, you get in. I'm going to manage my risk, but I have to trade the strategy. So we got in. Now, looking at this after the fact, I probably should have done a better job planning this trade in terms of profit targets. This 127.07 should have been a profit target. I shouldn't have taken it here. But this is after the fact. I executed the plan I had that I made at the time, but looking at this after the fact, reflecting on it, I didn't do a very good job with the profit targets. Now, we locked in profit here, and I was holding on to it. This was going to be the final target on this, but it never even got close. It pulled back. We lost a 9, and when I say we lost a 9, this candle closed below it, and then this candle made a new low. Whenever it does that, for me, it's losing the 9. But I'm seeing this over and over and over again. This is one of the things where I think market makers adapted to what we do. Here, this will be a trigger for somebody to go short because you lost the level. Then here you're making a new low. You're going to go short. Here is where I'm getting out. But look at what happened. They ripped it back up. It's like they baited some people going short, and they just ate them up on this candle. And then we started to work. So once this happened, here's a trend continuation. I'm looking to continue to trend up. We had a bounce here, was a higher low. It bounced over the 127 level. So this is clean and green. First target's going to be the 50-day. This is the 50-day moving average. I transposed from the daily. And then we just went to work hitting targets. I didn't have another target until like 134. I can't remember. It was 134 something. 134.50, I think. But that was the last cover I had, so I was just holding on to see if we could continue to make the move up. And sure enough, this thing went all the way up to almost 134 aftermarket. But it pulled back, stopped me out on this little trick that the market makers are doing now, and then started to rip up. The thing is, if you're using this for your stop, you got to use it. But you just have to adapt your execution based on what you see the market makers are figuring out. Because remember, their job is it's either we're making money or they're making money. And if they start to slow down making money, then they're going to come in and try to figure out what's the retail traders doing? What setup are they looking for? And then just attack it from there. But really nice trade, 321.39. We started with a $2,500 account this month. And I was asked, why do I do this if I'm trying to trade for a living? This is not the account I make a living off of. It's not. It's the one that I'm teaching you guys how to properly grow a small account. And the only way to do that is for me to get down and dirty in the trenches with you and prove to you that it can be done. And it's not something that I do every other day or whenever it's convenient. It's every day. And you watch, win, lose, or draw. That's the only way to learn. And that's the focus on this. So yeah, I do other things, but that's not what I'm teaching you right now. And that's not going to help you learn how to trade and learn how to grow your account so that you can start making a living doing this or making some decent money doing this. But looking at, I'm looking at where I'm at right now. If we add this up, we're about $800 to the good for this month. That's let's see. That's over 30% growth in less than 2 weeks of trading. So that's not bad. You got to look at this thing in percentages. You got to focus on the right things. If you're focusing on the wrong things, you're not going to get anywhere. But here we're trading 100 shares, 100 share lots. And yes, you can scale out with 100 shares. Roku has an ATR of 8 or something like that. I can't remember what it was. I know it's between $8 and $9. It's got an ATR. Trading 100 shares and scaling out on a, let's see what we got 125.15 all the way up to 127. So scaling out a 2-point move here and then a 3-point move here, and you're making money. So when you get more, when you're trading larger size, you're gonna make more money. Let's say on a $5,000 account, I'm usually trading 300 shares of this, right? So just triple what we made here. And I probably would have had more money to cover, and I would have locked in even more profit. So this could have easily been a $1,200 day versus a $900 day. So it's all about, if you can't trade 100 shares, you can't trade 500 shares. You got to learn how to manage your trade, manage your position size. You can come out trying swinging for the fences, and you can lose everything in one day. Or you can take it short, take it slow. Lose a little bit in the beginning, but then before you know it, you made it back and then some, and you're growing your account. But this is the perfect trade. This is the perfect, not so much the perfect plan, but the perfect execution of the opening range breakout. Now this one typically doesn't last this long, but it did. Most of the time we're done within 30 minutes, and then I'm in a trend continuation. This one just lasted a little longer, but then we're in the trend continuation, and I'm not exposing myself to the market doing anything else. I'm locked in on a stock that came up on my scan. It's got a good catalyst, and it's trending. And all I'm doing is riding the trend, maximizing the efficiency of my trading, and then moving on to the next. You get this concept down when you're trading small, and as you add position size, you're gonna be even more efficient, because the more you do this, the better you get. More efficient, you got more share size on, so you're making more money, and you'd be surprised at what you can do. I mean, surprised. And this is it. It's just that simple. The concept is just that simple. The execution part is hard. Getting in your mind to stop chasing other things, stop looking around, focusing on the one stock or two stocks that you had on your watch list that actually set up, and maximizing the potential of each trade. And we're not going to get the exact bottom or the exact top, but if we get the meat of the move, that's all we need to be successful. All right, so that's it from my day. You know, I'm teaching you guys this because this is what I did. This is what a lot of other traders have done to get to the point where they can do pretty good doing this. And I'm just trying to share the same thing to you. You know, this is realistic. This is real. This is not fake. This is not somebody playing every other day or whenever they feel like it. This is everyday, real, grinding it out. And that's what it's going to take to get to that next level. All right, guys. So that's going to do it for me today. You guys have a good night. And I will see you first thing in the morning.